Bitcoin is the money protocol of the internet. It represents the conversion of value, energy, and information in a single investable asset class. Some people say it's not old enough, that it doesn't have enough history. Since I shared this presentation a few weeks ago, these slides have been viewed more than 355,000 times. 2,000 people watched me deliver this presentation live on the Simply Bitcoin TV channel, and hundreds of people have downloaded the presentation since. I'm all about education, and sometimes we need to step back from the current news and look at some of the time-tested and true values of Bitcoin. In this presentation, I share how all premiums, portfolios, and products are converging into Bitcoin right now. Why Bitcoin is the next digital monopoly in the era of the dominant digital networks. I even present data that refutes claims about Bitcoin being like gambling or that it's too volatile. And finally, why we're still early. Bitcoin is democratizing property rights. It's dematerializing monetary premiums from analog stores of capital. It's disrupting traditional finance and making lending, borrowing, and payments frictionless. And all things being priced against Bitcoin are deflating, gradually, then suddenly. I hope this presentation for you is valuable today, and I hope you learned something new. This is Dante Cook with Bitcoin Simply. Let's go. In this presentation, we're going to learn about Bitcoin simply. So let's rock. Let's go right into it. All right. So first thing I want to say is that we're all skeptics at some point, right? We go from denier to hater to skeptic to trader to investor to a hodler and then a maxi. So you go from it's a Ponzi scheme and I hope that it blows up. A very Peter Zeihan type approach. Oh, it's 17,000. Well, it's got about 18,000 more to go, right? Great quote, Peter. And then you go to a hater, oh, they just got lucky. Then it goes to I own a little bit of BTC mixed with some Boba coin and some Litecoin and some other things. And then you start to understand what Bitcoin actually is. And then you're finally like growing your own food. You have a Starlink and a generator to run your like nodes in the background. So we all go through this process. So wherever you are in this journey, I just want to welcome you here, because I've been on that journey myself. Because Bitcoin is something like once you see it, you can't unsee it, right? It just starts as this little thing in the background and then it's just like everywhere. It's right in your face. And so that's kind of what happens in that process of becoming a Bitcoiner. And so I always start this question off. People talk about Bitcoin becoming this thing to like replace the dollar and a new currency and all of these sorts of things. I mean, let's just start with the practicals here. If Bitcoin didn't exist, would the dollar still be collapsing? And the answer is yes, because Bitcoin just came onto the scene in 2009. This dollar debasement thing has been happening for a long time. So people act like Bitcoin is somehow, this new thing that just came about to replace it. The dollar's been replacing itself in light of harder money for a very, very long time. And so when you look at the US dollar purchasing power, this isn't from me. This is from the Fed, from the Fred St. Louis website. And you can see over time, there's just this downward slope. And that means that everything that you're paying for in dollars is becoming more costly. And it's pretty simple. Like this is a great slide from Anil. As the money supply increases, right, we're measuring that increasing money supply against something that's a fixed asset, which is Bitcoin. And how do I know the supply of Bitcoin's 21 million? Well, you can go to bitcoin.org, download and look at the code for yourself. But what we're going to have is this math equation, which talks about the number of halvings that we're going to have and the number of blocks issued. And so it's just math. We don't need to get into the nerdy stuff, but it's pretty simple when you look at it with a visual like this of why Bitcoin will never be more than 21 million. And so the reason that people invest into a lot of different asset classes is because we're pouring our economic energy into the dollar, which is losing energy. And so you have this thing that's losing energy so fast that we have to then translate that into real estate, bonds, stocks, fine art, precious metals in order to preserve our economic energy. That is what money does fundamentally at its core. And what's happening in Bitcoin is that those things at the bottom of that last slide represent $900 trillion in assets. And Bitcoin is absorbing $900 trillion worth of asset into what is now a $2.1 trillion asset class. And I wanted to give a shout out to Croesus because it seems like people are just biting this up and not giving any attribution here. And so what I like to say, is Bitcoin, if you're a basketball fan, Bulls, mid 90s, I'm a millennial. Bitcoin is like, Phil Jackson running the triangle offense because all premiums, so what they call a monetary premium from all outstanding debt in stocks and art and real estate and precious metals, as well as portfolios from universities, pension funds, companies, endowments, mutual funds, sovereign nations, as well as products, your credit cards, your loans, your mortgages, any lending, insurance products are all converging into this dynasty, this offense called Bitcoin. I call it the triangle offense. So premiums, portfolios, and products. And so everything's kind of converging on the center piece right now, which makes Bitcoin more and more valuable over time. And one of the interesting things that I love telling people here, right, when the price goes up of any other sort of asset or commodity, when the price and demand goes up, they actually increase the supply. So again, as more countries, buy US treasuries, well, they're going to issue more treasuries. As the price of stocks go up, they're going to issue more shares or fine art or other things, real estate, right? As the value of these things go up, they can actually just make more of these things. In Bitcoin, it's sort of interesting in that as the price and demand goes up, well, what's happening is that the supply cap is fixed. So the available supply to purchase stays the same. You can't actually make more of Bitcoin. So that's kind of a fundamental shift for people that they're trying to understand, well, if price goes up, well, they're not making any more. And so Bitcoin is just the newest digital monopoly. So when you look at all of the digital monopolies that have existed in the past, what you see is on the left, if you look at the top 5 companies by market cap in the 80s, 90s, 2000s, 2010s, and all the way forward, well, you can see that they were not technology companies. And if you go all the way over to the right here, you'll see that all 5 of these companies are technology companies. They're actually just digital monopolies, when it used to be one and then none going back over here to the left side of our screen. And so this shows the power of digital monopolies expanding in our economy and how technology works. You have technology democratizes it first. And so what happens is something that a very few people have, a lot of people can get a hold of, which, you look at automobiles, televisions, computers, cell phones, they've all gone through this process. And again, that window is shrinking over time of how quickly these things are democratized or shared across everybody. And then what these things do is what they call dematerialize everything. So when you take the iPhone, for example, the iPhone replaces all of your files, all of your music, all of your camera, all of your news, all of your television, all of your calculators, all of your messaging, all of your credit cards, all of your maps into a single device. That's the process called dematerialization. And then what happens next is disruption comes because of that. So all of these technologies here are built on top of this democratized access to information and technology. And then over time, what happens is the prices of everything you pay for actually deflate against that technology. So one of the things that I like to tell people is a terabyte of data costs $6,000 in the year 2000. And today it's just $10, right, for 1 terabyte of data. And I didn't just do that against technology. This is all sorts of technologies. If you look at this chart here, I just plotted some of these out here. All technologies are actually deflationary over time. Good technologies allow us to do more with less. And what's happening on the other side, right? We talk about McFlation. It's kind of a joke. Well, it's the opposite when you're measuring everything in bad money or an inflating currency. And so like the price of a, McDonald's cheeseburger has gone from 19 cents to, $4.32 over time. And it's the same cheeseburger of lower quality. And so what happens is the perception is we think the dollar is a stable thing and that, Bitcoin is sort of this volatile thing. But it's actually the opposite, right? Bitcoin is a stable asset that's being measured in this other asset that's fluctuating on the other side. And so what happens is this is the 4 Ds of Bitcoin adoption, right? Bitcoin is democratizing property rights in a store of value for 8 billion people on the planet. And it's dematerializing all of those analog stores of value and monetary premiums into a digital store of value. And then what's happening now is it's disrupting traditional finance and all of the ways that we would lend, pay, transact, and all of these sorts of things. And then eventually it's going to deflate the prices that we look at against all things. And like I said, this happens gradually and then suddenly. And so the world priced in Bitcoin gets cheaper. If you can't see this chart, it's basically a chart of currencies, homes, commodities, goods priced in Bitcoin over the last 5 years. And there's just a sea of red over here. Everything is getting cheaper in Bitcoin land. And this is probably my slide that I love the most. People go, well, I don't understand Bitcoin. Well, just because you don't understand it doesn't mean that you shouldn't use it. So what we use every day, we're using protocols. Okay. So right now we're actually using the voice over internet protocol, which is what we're using to do live streams, Zoom, Skype, every Google Meet is happening over voice over IP protocol. Every email that you send is happening over the simple mail transfer protocol. Every file you send is likely leveraging the file transfer protocol. Every domain you use is using the DNS or the domain name protocol. Every website is probably secured through encryption, right? That you see that TSL or TLS and SSL on your websites. All of the browsers that we use are built on top of the TCP IP protocols. And so Bitcoin, if you want to think about it, you use protocols all the time and you don't question the underneath of how it actually works. Well, this is how Bitcoin is just the money protocol. And so my thought is that you might just consider using it because you use a protocol all the time. And so what's happening with Bitcoin is over time, value has changed, right? From storing value in glass beads to cows to livestock to, money to now cards. Energy is transformed from wood pellets to, water mills to coal to oil to natural gas to hydrogen gas. Information has gone from parchment paper to the printing press to mail to email to PDFs and websites, and then now it's happening over our phones. And so Bitcoin is just the transformation and convergence of information, value, and energy, kind of in a single asset class. Speaking of Bitcoin being at the convergence of value, energy, and information, one of the ways that Bitcoin is transforming value for lenders, it's because it's 100x simpler for them to lend against Bitcoin as collateral than other physical forms of collateral. And this was the premise that Ledn was built on. They're Bitcoiners, and so they don't want people to sell their Bitcoin, but they did want to offer people a simple, easy, and intuitive way for them to unlock the liquidity in their Bitcoin without selling their Bitcoin. Ledn is the leader in Bitcoin lending, and since 2018, they've lent over $6.5 billion worth of loans to tens of thousands of customers, of which I'm one of them. The loan process took less than 2 minutes to complete, and then my account was funded in less than 24 hours. Ledn has been the leaders in this space, and they are one of the first and only people out there in this business to provide a proof of reserves from public accountants. You can trust that your Bitcoin is safe. Borrow against your Bitcoin today, safely and with peace of mind by going to ledn.io/borrowing. That's ledn.io/borrowing. Also, when it comes to protecting this once-in-a-generation asset called Bitcoin, you want to make sure that you're protecting it properly, the right way, and removing all counterparty risk. You can do this by taking self-custody and by taking your privacy seriously. You can get a coach to help you do this in a simple way at thebitcoinway.com. Members of their team will take you through proper 100% self-custody, step by step, so you can remove all counterparty risk, stop sharing your keys with third parties, and ensure you protect your generational wealth the right way. Go to thebitcoinway.com and schedule a free 30-minute consultation with their team. Let's go through and do some Bitcoin data analysis because some people like, hey, Dante, that's all cool. That's ethereal. These are some big concepts. Let's just dive into some hard numbers for people to understand. If you don't really care about the philosophical stuff, let's just get into the factual stuff. Forget your feelings, right? Bitcoin's been the best performing asset over the last decade. So if you look at that top bar, that's Bitcoin right there, and it's growing about 10% a year annually if you look at the last decade, or 78% a year looking at the last decade. If you look at 11 out of the last 14 years, it's actually been the best performing asset. And annualized, that number goes up to 149%. And let's just say, you wanted to be conservative with how you thought about Bitcoin and buying it in a more traditional sense. Well, I just ran some numbers and I said, hey, what if you just took 90% of your cash or 100% of your cash and you allocated just 10% of it into Bitcoin starting at April 30th of 2020. Let's just look at COVID. We don't even have to go back even any further than that. And the 100% cash portfolio returned about 0.67% a year. And I just picked the cash equivalent in terms of the markets, right? If you just added 10% Bitcoin to that portfolio, you would have actually outperformed the S&P 500 with 90% cash in that same time frame since COVID, right? So not understanding Bitcoin shouldn't prevent you from using Bitcoin. Bitcoin doesn't have enough history, Dante. I can't invest into it. That's a bunch of baloney. BS, not for Bitcoin simply, but I'm calling BS in other ways. All right. Bitcoin isn't old enough, Dante. All right. The iPhone came out in 2007, Airbnb in 2008, Hulu and Spotify in 2008, Tesla Roadster, even Google Chrome, which we're doing this presentation on, came out in 2008. Bitcoin came out 3 days after 2008 and 2009, alongside WhatsApp, Pinterest, Uber, Venmo, Slack, and Square. And you're telling me that you don't use those things every day? I'll pause. That's for dramatic effect. But all of these things here, this got me right here. The air fryer did not come out until 2010. And I know some of y'all don't know how to cook, can't use the oven, can't use a grill, throw it in the air fryer. The air fryer is younger than Bitcoin, but you don't question whether you should use an air fryer. Okay? Lots of innovations have happened after Bitcoin and around the same time. And one of the things I always say is, Dante, there's not enough data to analyze about Bitcoin. Well, I actually looked at how many trading hours the stock market had going back to 1971, and it's only 100,707 hours. Bitcoin in just 15 years, because it trades 24/7, 365, has more data points than the stock market going back 53 years. Bitcoin has more data. Bitcoin has been around long enough. And again, you don't have to understand it to actually use it and leverage it. Dante, isn't Bitcoin like gambling? Well, it's not like gambling at all. I actually looked at your percentages and likelihood of winning in slots, baccarat, let it ride, poker, craps, and I compared that to Bitcoin. I just took a sampling of data going back to like my birthday, going back to 2016, because if you go back further than that, the numbers actually look way better in Bitcoin's favor. But Bitcoin's chance of you winning in Bitcoin is like 96%. And what do I mean? Well, if you look at these holding periods, the longer you're in Bitcoin, the more likely you're to win with Bitcoin. So if you held Bitcoin for a year or more in that time frame, your likelihood of having a positive return is 70%. For 2 years or more, it's 79%. For 3 years or more, it's 90.3%. For 4 years or more, 96.06%. And if you've held for 5 years or longer, your likelihood of winning is 98.5%. Again, looking at that period. And the average returns in that period are absolutely nutty. And so Bitcoin actually isn't like gambling, depending on your time frame. So if you're a trader, might be like gambling. But isn't that with anything that you buy and hold? Inconsistent. So I looked at, despite what you hear, Bitcoin is up. Meant to say more than it's down. So actually over that time frame, the number of positive days or times that Bitcoin is positive, like has a day that finishes higher than when it started, well, it's 54.3%. So you're actually like, if you just put your money in it, it's actually winning more than it's losing on a day-by-day basis. And I just did some, bull and bear analysis. I looked at, does Bitcoin have the same amount of drawdowns, and are they as severe as the number of upswings, right? And so Bitcoin is actually more volatile upward than it is downward. When I look at what I define as a mini bear or a mini bull, that's a move in the price between 10 to 20%. Well, a downward price movement has only happened 37 times. Upward price movements have happened 42 times. So it's actually been more volatile in those mini bulls than it has the mini bears. The mega bear, 20% or more, has only happened 24 times, but the mega bull has happened 29 times. Bitcoin, not only in its moves up and down and the amount of time is positive, is actually not what you think and what you believe. And so this is why Bitcoiners say we're still early. If you believe that we're still early, then like the hundreds of other people joining me down in Dallas, Texas from April 3rd through April 6th, you won't want to miss out on the BitBlockBoom conference. It's the longest running US-based Bitcoin event at over 8 years old. With your all-inclusive ticket, you get to hear from some of the best speakers and minds in Bitcoin, like Parker Lewis, Marty Bent, Guy Swan, Bob Burnett, and me. Your ticket also gets you access to exclusive workshops like how do I buy my first Bitcoin? How do I do mining at home? And it also allows you to get exclusive access to events like the Saturday Casino Night, where you can meet some of your favorite Bitcoiners that you watch on TV, on Twitter, or listen to on podcasts in real life. Go to the bitblockboom.com and use the promo code BBB25 for $100 off your all-inclusive ticket. That's BBB25 for $100 off your all-inclusive ticket. Subscribe to the channel, like this video, and share it with someone else if you got value from today's episode. This is Dante Cook with Bitcoin Simply. Happy stacking.